Right, so today we are going to share about the weaker dollar meets opportunity. So thank you for tuning in to tonight's webinar, and definitely grateful, I would say, to always have this opportunity to collaborate with IG. And so once again, good to have you, Benny. And so this is what we're going to discuss tonight, and is the US dollars really that strong? And I would say that usually, when I want to compare the US dollars, because it's a developed country, and I would like to compare it with also a developed country as well. As we can see in this dollar sync chart, and over the last 40 to 50 years, in fact, the US dollars have declined tremendously down to about 45%. And of course, if you say, for example, to me, it's a lot because when a currency pair, when it trade, currency trading when depreciate by 45%, is significant. Why do I say so? Let me just give you an illustration here. Is that, can you imagine if you buy some US shares or even properties in the 80s? And then today, of course, thankful that your US shares have appreciated by multiple folds. But with the depreciation of the US dollars against Singapore, about almost close to 50%, you have to halve it. Whatever profit you have to halve it. So that's the significance of currency. Unlike stocks, a movement of 10% depreciation, it speaks a lot. And we're going to discuss about where is the US dollars heading in the next 5 to 10 years, and where is the opportunity. Instead of focusing on, yes, dollar may be declining, but where is the opportunity moving forward? So this is what we are going to discuss here tonight. I'm going to talk about the inverse relationship between the US dollars and other assets. So it means that when US dollars is down, other assets may be heading up, but whereas other assets may be heading down as well. So of course, with a platform like IG, even at the assets is heading down, you can sell short the assets also. Then I think the second point will be a little bit more interesting here is that I'm going to discuss about who is the leading indicator when US dollars is down, who is moving up. And this is a asset that I always note that is a leader of all the other assets. As long as that this asset is up, the rest of the assets, according to their timing and reason, will also move up subsequently. And we're seeing a lot of them. And some of them is just at the beginning of moving up. So that's where we're going to discuss if this assets already move up. It may be a little bit pricier for most of us. So what are the group that's moving up next? Of course, the presentation should not be more than an hour, but I hope to reserve the next 30 minutes that we have in the time of Q&A, and Penny will facilitate that. So this is a disclaimer, and what I'm going to present to you here is definitely not a recommendation, but it's definitely my conviction for my own investment journey and my own trading journey is for my own consumption. So if you have any take back after what we discussed and you're still not sure, you want to find out more, please consult your licensed broker who is IG Singapore. They were able to help you. So some of the um, what I'm good at, in fact, is called quantamental analysis. Now, what is quantamental analysis? We're going to see a lot of it tonight here, where I think it should not be just solely that I'm using it. I'm actually advocating that investors and traders should also adopt this quantamental analysis. It means that I usually, for myself, I use technical analysis to pick up upcoming trend, potential trend. But this upcoming trend, you also have to ideally that it can confirm with some fundamental understanding as well. When these two analysis merge, it became a proposition for myself to let's get into the market with a calculated risk in mind. So we're going to see that, but of course the topic will be revolved around with a weaker dollar to come. It's already pretty weak, but will it go down some more? We're going to discuss about that. If the dollar is going to continue to move down, where else are the opportunity that is up and coming? So that's the key that we're going to discuss here tonight. So let's take a little moment to further appreciate the US dollars. So this is dollar index, it represents the dollar trading partners, their group of partners measure the dollar index. So again, let me just bring you back to about 40 to 50 years ago. Is dollar really that strong? And my answer is not exactly. But of course, compared to the emerging markets, dollar seems strong. But compared to its trading partners, dollar to me has been on the decline, and especially to those countries that manage their currency well, like Singapore. Is you could see early example that Singapore dollars have strengthened against the US dollars by quite a bit. But we could see a general trend. And tonight I'm going to focus also the time of 2022. And if you can recall what happened to 2022, to me, it's a very significant year. We could see that the dollar index start to decline by 16% from its peak to around the recent low. And to me, again, between currency pairs, a 60% drop is a lot. Just think in terms of trading partners, in terms of business to business in different countries, import export. 16%, it means that you maybe earn 16% lesser from what you used to get between currency pairs. So, and this is the dollar Swiss. We could see that over the last 50 years, the Swiss has appreciated with against the US dollars by 6 times. Yeah, just by the March alone, it has appreciated against the US dollars by 22%. So what exactly is happening? So on the first part, I'm going to explain to you what is happening to the US dollars. But of course, again, for those that just join us, if the US dollar is going to continue to decline, and where else are the opportunities? So that will be the focus that we'll be discussing tonight. So this is the dollar sync, which we have discussed earlier. From 2022 to current, it has US dollars have depreciated by 12%. It also means that Sing dollars have appreciated by 12% against the US dollars. Okay, I would have one question before I get into Q&A. I just want to get a sense of among the participants tonight, what is your view about the US dollars? I want to get a consensus. I do not know. I think we have multiple of tens, maybe 50, 60, or 70 of us here by now. What is your view on the trend of US dollars over the next 5 to 10 years? So I want to get a sense here. Could you type on the, I think the chat box or the Q&A box? If you find it's moving up, you just put up. If you find it's down, you just put down. My question to you is that what is your view on the trend of US dollars over the next 5 to 10 years? So I have my answer, but I just want to hear from you. What do you think? I want to get a general consensus, and that will be a market sense of what are the investors and traders thinking as well. So maybe you can do it now. I will just leave it open for the next 30 seconds. If it's up, you put up. Down, you put down over the next 5 to 10 years. Let me just go to the chat box and get a consensus from you. Oh, we have about 77 of us here tonight. Can we see the, oh, it's a Q&A. Okay. Can I have more contributor? Yeah. I think it'd be great if we have 1/3 of 77 of you participate attended. So I could see the next 5 to 10 years. Most of us feels that the US dollar should be heading down. Maybe the next 10 seconds or so. Yeah. So that's my general feeling as well. But the question is that why? Why US dollars is heading down? It's already down quite a bit as we could see. Why is it going to continue to move down? And so to me, it's always important if we know the reason why. As we've moved into our investment and trading plan, there's a platform for us to have that idea why. So we're able to move into it more comfortably. So I think it's quite clear that we are alike, that most of us, I would say that 90% or 95% say that it's heading down. Okay, so I just move on to the presentation here tonight here. And I hope that you can see my PPT. Going back to the slides, what is your view on the trend of US dollars over the next 5 to 10 years? I think 90% of us say that's down for the next 5 to 10 years. I have to be time frame specific as well. Maybe after 10 years later, things may have changed. So then there's a lot of things that we can do over the next from now to the 5 to 10 years later. So let's discuss about the reason why US dollars is heading down and could be heading down some more the next 5 to 10 years. Now, the key reason is because of the US debt. And we could see that if you're going to compare Sing dollar, dollar Sing, or dollar Swiss, there's a reason why the dollar Sing and Swiss has appreciated against the US dollars over the last 40 to 50 years. And just to get a sense of how much money did Singapore printed, and I think the answer is zero. Yeah. How much money did Swiss printed? And the answer is, according to the central bank website, is about 141 billion Swiss. Yeah, 141 billion Swiss. But US have printed about 36.21 trillion. There's no B, but there's T. So there's a lot. And that's a reason why you could see that there's such a disparity between dollar Swiss and dollar Sing. Okay, let's move on. So the question to me is, as an investor or as I trade along this trend, is that my question is that at any juncture I'm going to ask myself, is the debt going to come down at all? I'm going to talk about the US debt. And if my answer is no, if the debt is going to continue to move up, it also means that I got a very clear idea that US dollars may be heading down. But of course, the topic tonight here is that with US dollars weakness, where are the opportunities? So we have to recognize this chart. Where's the debt heading? If the US debt is heading still going to continue to move up, then likely the strength of the dollar is going to continue to decline. And where's the opportunity we're going to discuss right now? And where I see that in March 2020, we could see that the US bonds have peaked. And 2022, we have broke the last, I would say, even 30 or 40 years of this super uptrend line. That was in 2022. And remember earlier I said that 2022 was a year of significance. So later on, I'm going to spend a little bit more time to explain why. And then here we are. And we could see an inverse relationship as US dollars continue to decline, debt go up, bonds should come down. So if you're trading the bonds, my direction should be continue to sell into strength in the UST bonds. So now it's down by 44%, and to me that is a lot for bonds to move down by 44%. And let's understand why is the US bonds moving down and what is it telling us when the US bonds is moving down. Okay, think for a while, ponder for a while. When the US bonds are in this kind of magnitude, down 44%, what is it speaking to you? To me, I read it as the trust is no longer there. There's a loss of trust because when come to bond, I issue bonds as I want to get a loan from you, I issue bonds. I able to get money, lend money from you. And why able to lend money? Because you trust me. So when the bonds is coming down, it also represents that there's a loss of trust in the US bonds. And the next question is, which is important to address, will this continue? And my answer is slightly a yes. Why? Because as we studied back earlier, as the bonds or the debt continue to rise, US dollar is going to decline. When US dollars decline, bonds will likely to head downward as well. Now let's go deeper into it right now. And we could see that if you're going to trade the bonds, which is available in IG, I will continue to sell into strength strategy, adopt this sell into strength strategy. We could see that March 2020, which I'll be covering it later, that was a peak in bonds. And over this last few years in partnership with IG, we discussed about this period in March 2020 that potential peak. But now what I'm trying to share with you here is that the breaking point, which we also along the timeline, as I come here as a guest speaker, we share about the bonds have broke the major resistance. So, but it's only recently that we read in the news article that on the April and onwards, only the last few months, we read about news, economists start talking about it, that bonds is coming down. did the bonds actually start to come down on the 2nd of April, the Liberation Day tariff onwards? My answer is no. The bonds has started to come down a peak in March 2020, start to broke below this long-term uptrend line in somewhere around June 2022, somewhere around there. And what was significant in June 2022? And when it broke, and that's to me, that's a crucial point, and that's the period where I start to strategize different assets, different trading strategy because of this outlook. And moving forward, if your answer is that likely the bond is going to continue to move down, and the rest of the strategy should be quite straightforward. And this is what we're going to discuss here tonight. Okay. So we got to understand about why it has peaked on this date, March 2020. Now, let me just give you a little bit of recap, a little bit of story here is that March 2020, if we still remember, it was the year of COVID. And March 2020, it was a time where the Congress and the Central Bank of the United States also roll out this COVID QE. And the amount was massive. It was 4.8 trillion US dollars. Now, let me just go back to QE 1, 2, and 3. It was the first time US rolled out the QE. And QE was invented by the Japanese market, I think, in the year 21, if I'm not wrong, okay, some years back. And Japanese market have some proven success on QE. So when the '08, the Wall Street meltdown crisis, US also attempt to experiment on QE, and it was proven relatively successful. On whereby the central bank print money and buy their own T-bonds. So it was 1.3 trillion US dollars. But this time round, in March 2020, when the US attempt to do that, they printed a lot, about 4.8 trillion. But what I'm seeing here is that the investor do not like it. Yeah, because you print money and buy your own bonds, something's not right about it. Initially, it was good. The quantum is not that much. It can't provide liquidity to the market. But this time around, as they do it, let's go back to study the bonds. And that's where the bonds peak in March 2020. And what I'm seeing here is that investors do not like this, therefore they are liquidating the bonds market. Now, what is the significance of the after effect of printing too much money and buy your own bonds? It causes your currency to devalue. It also causes, when the currency devalue, it also causes inflation. Now, as we can see here, the second most significant date here is June 2022. Because of this action, and of course with over the years of other action, but this is a major one in March 2020. And it caused, there's always a lag effect. Some time delay is needed. In June 2020, and finally the inflation hit a high of 9%. So though it's coming off, but we can read from Jerome Powell statement that he's still not comfortable about it. Yes, because he have not reached below 2% or range bound around 2%. So recent data, it just spiked up again to about 2.7%, the inflation. Now, let's discuss a bit further here. Is that also the tariff come into play later on. Bottom line is tariff are just it's like the weather, you come and go. Yeah, tariff may come and the key issue is that climate is there. What is climate? Climate means that in financial market is that when you print too much money, this is climate. It's a long-term thing. When you print too much money, it will cause US dollars to be diluted. When the US dollars is diluted, it will cause inflation climate. It's a long-term thing, very difficult to solve. So war, pandemic, tariffs, it can be what we call weather. It causes spike in price spike. Go, but
Hi,
the
Con, how?
threat being laid
Sorry,
out
I
is
think.
inflation climate. Climate is long. Now, what happened here that, of course, we know that the second 8 years.
Sorry, I think there
Can you
might
hear
have
me?
been a slight disruption. I think maybe the internet a little bit. So just wanted to do a check-in. Like,
Okay. Yeah, I think I'll just continue. Yeah. Can you hear me now?
yep, all good.
Can you hear me now?
Yep.
Okay. Yeah,
Yes.
I'll just continue
Thank you so
unless
much.
the lag is like gonna last for a few minutes. Yeah. So now
Okay.
let's go back to what happened here in the tariff here is that the first time announced was 2nd April, and the baseline tariff was on the 5th of April. Yeah, everything there's some time lag here. And on the this note here, and this is where it's published on the 1st of June, some Walmart worker took some snapshot of photo of the price tag of Walmart, and they find that there's a price hike of 38% or more. So Target is another major mall like NTUC and Giant in Singapore. So Walmart and Target is like our NTUC and Giant. And now what you can see here is that the 5th of April, the 10% baseline, it has already affect the retail price. Yeah, the market already went up. So, and coming 1st of August is the deadline of this tariff negotiation. So after 1st of August, it will be the baseline 10% and more. So everything there was some time lag. But just based on the 10%, we could see that the July publish the June CPI number, and there's this uptick here. Yeah, so uptick here. Unlikely today's FOMC meeting, the Jerome Powell will cut rate. Yeah, because the CPI is moving up, and on the ground, we could see that the retail price is already moving up by about 38%. Yeah, that's what according to Business Insiders. So if you want to brief more into the inflation in US, maybe you should take a flight there to US to take a look as well. Yeah, then the question is always about is the debt is going to come down at all. When I say where is the tipping point, I'm not referring to the debt will come down, which I think unlikely the debt will come down. When I say tipping point, I'm referring to where as the debt continue to move up, is there any tipping point by to other markets, say for example the US stock may come off. Yeah, so this is a question that we have to address here. And let me just offer you a very simple mathematics thoughts that I have. When debt rises like this, and what is the cause and consequences when debt rises, the currency will be weakened. When the currency weakens, inflation to accelerate. Now, if you can't see the relationship, you just imagine that why we have a strong Sing dollars and why the Singaporeans love to go to Japan for holiday because the Japanese currency is weak. So just think in terms of if you are Japanese, inflation is much more worse than being a Singaporean here. So you could see the relationship because the Japanese yen is weaker. So as US dollars is weaker, it also means that inflation to accelerate. So this is a formula that just go by this flow. Debt rises, currency weaken. I'm referring to the US dollars. As currency weaken, inflation accelerate. And the bad news is that the US dollars is being exported all over the world as well. So when US dollars exported, it also means that they also export the inflation to the rest of the world as well. Okay, so that's some insight for you. Now, and on this date, on the 2nd April last year, so I presented this uh, to the CFA, the fund managers in Jakarta. So then the goal was at 2003, and today goal is at 3003. And then the dollar index was at 105. And then our representation here is that on this inflation to accelerate. As US dollars continue to drop, it will cause currency dilution. As currency dilution, there will be inflation, and maybe all of us should recognize that gold is an inflation hedge indicator. It means that what I'm trying to present then in April 2024 is that I believe that the US dollars will continue to drop. If it drop, the inflation hedge assets like the gold should continue to climb. And how about today? And the dollar index continued to drop. The recent lowest point was at 96. As this happened, we could see that the gold from earlier 2003, it has increased to the recent high of 3005. Yeah, so the proposition here is that where's the opportunity? And if you ask me for long-term trend for the gold, and I believe is that if you believe that US dollars can continue to on the downtrend and likely on the long term, that the gold likely is going to continue to move uptrend. But in the short term to mid term, I'm seeing that gold is going to have some headwind and may have some correction to come. That's in the short term to mid term. But the long term, I'm still seeing that there's a potential that US dollar is going to continue to be on a downtrend. Therefore, the long term, the gold will continue to move up. Now, let's discuss further. So, what happened to June 2022? Of course, that's when the inflation hit a high of 9%. And the inflation coming down for good, I'm not exactly sure. And Jerome Powell have never commit that he's going to cut interest rate. Now, all these news that we read that potentially he may cut is all from the news reporter. They hope that he will ease interest rate, but he never said that he's going to ease interest rate at all over this period. Now, what happened to when UK eased interest rate, I think for 4 times in a row, about 25% cut each time. So far, they have cut 100 basis point, which is 1% on the interest rate. Now, what happened here is that I think Jerome Powell do not want to see that, is that this is UK inflation. It also reached a high of 9.6% in October 2022, and it also came off. So as it came off, the BOE cut interest rate around 3 to 4 times, each time about 25 basis point. Now, when they do that, the inflation start to creep up. And this is what Jerome Powell hoped not to see. Now, let's move on very quickly because I want to move into this asset rotation play, which is very interesting, where we're going to discuss about as US dollars continue to decline, where are the assets that potentially will be moving up. So this is what I have, my flow of thoughts. Yeah, so I presented this to the fund managers, the CFA society across the different region, and today I'm just going to also present it to you as well. Now, so what for US, it began well, it grew risky over time, but yet I want you to see that things are getting a bit riskier, but yet there's opportunity awaits. So we discussed about the debt and QE. Yep. So and because of this debt continue to increase, and it seems to be very tough for the US not to have debt. I think the debt will continue, and you also have to understand that on the next crisis, will the central banks deploy QE again? And personally, I feel that on the next crisis to come, they may apply QE. When they apply QE, you're going to cause the debt to continue to escalate further, which is the flow is that if that's going to happen, the currency will continue to depreciate further. Let me just off this. The currency is going to continue to depreciate further. When this happens, we should explain it causes inflation. When inflation comes in, the interest rate will continue to stay firm, like US right now, and interest rate and yield are similar. And how to understand interest rate and yield is like interest rate set by the central bank. Yield is something like your fixed D, or the 2 years fixed D, 5 years fixed D, or 10 years fixed D. If we don't have the 10 years fixed D, or the 2 years mortgage rate. These are called a yield. So interest rate and yields move hand in hand together. So if that happens, bond should continue to depreciate. So between the interest rate and bond, there's no in order, but they move along with each other. Now, when this happens, and I suspect the US market is going to remain very volatile, and it seems to be up now, but I reckon that the US market going to have a lot of trading opportunity. It's going to remain volatile, and therefore, over the past 3 years by now, I've been advocating to do assets rotation allocation. So we're going to discuss that in a short while. But let's just move into our second segment. Which commodities is leading? So now, instead of asking that the Fed, if you're a reporter and or economist asking the Fed, the CPI inflation is becoming off, why isn't Fed cutting interest rate? But let me just change this asking question method. Why not we ask this question? Why does the Fed prefer to maintain interest rate at the current level instead of asking, hey, the CPI is coming down, why are you not cutting interest rate? I would prefer to ask the later question. Yeah. And let's look at the leading assets in the current market. And who is it? And my answer is gold is the leading assets. But I think gold is having some short-term resistance right now. So therefore, the other asset class, in my opinion, could be moving up. Now let's get into this second segment here is that if the US dollars continue to decline, depreciation of currency will cause inflation, and gold as an inflation hedge assets as a leader, and today we're seeing is at a high point. Then let's discuss about that before we move into other asset classes. So this one we study about it, debt and QE, and then who is next? And I would say that if the debt and QE and US have a lot of it, you'll cause other currency to appreciate against the US dollars. Now, this was captured at the end of March, the first quarter. As I study the first quarter here, is that I believe the yen outright will continue to move up. That's where the last quarter of 2024 and the first quarter of 2025, I'm seeing a bullish engulfing body where I think the yen outright will continue to move up. So is the this is was the last quarter, first quarter, and the pound should continue to move up. Why? Because the US dollar is coming down. So is for the rest, as we could see that the Aussie dollar for the first, this is a monthly chart. For the first, I think, month of February, we saw a very nice hammer, and I think today is a little bit much higher. And dollar offshore yuan, if it's coming down, it means that US dollar is coming down, offshore yuan is moving up. Yeah, so certain pair of currency, you just have to understand the relationship. So dollar Swiss, we discussed about it. So is the dollar CAD. So when US dollars continue to weaken, and the other currency pairs will have opportunity as well. So that's what I'm seeing here. So again, that if there's a lot of uncertainty, but I want to bring a point up to you here is that there's also a lot of opportunity somewhere else as well. So focus on the opposite pair of the US dollars. Now, then is the inflation. With inflation, all these commodities will start to move up. So what happened here is that on September 2023, I freeze the moment here was because I also presented then gold was at about 2,100. Yeah, so my proposition was that I make this statement. I think one of the economists from IG, he loved it, but he no longer with IG. He say that, Kong Hao, I like what you say. You say that gold is the leader of commodities. As long as gold remain high, the rest of the commodity, according to their timing and reason, should pick up. So I've reached this point here for all these commodities. As of September 2023, we saw the gold continue to move up, and subsequently we also saw the cattle start to move up. So I prepared these slides about 2 weeks ago, and today the cattle prices from 311, it went up some more to 336. It continued to move up. So copper prices as well, as of September 2023, it was here, but now it's here about 2 weeks ago. But as of now, today, 30th of July, it was at 5.639. Yeah, so just about 2 weeks ago, it was 4.79. So you could see that the commodity are still moving up. So what's your thoughts when we look at all these commodity prices? It will affect the inflation data. So when I look at them, I don't quite agree that the inflation is moving down. Although it's from 9% to about 2.3, now it's 2.7 for US inflation. But looking across all these commodities, I have to disagree that there's a good chance that the inflation is going to come down to 2%. But because all these commodities speaking to me that is still very much elevated. Yeah. So again, and the current opportunity I'm seeing here could be the soybean oil, and it should be available in IG as well. Do take a look. Copper and silver is something that I like, where silver was on the 9th of this month. In July, we have another session of IG. We spoke about silver, where I felt that we discussed about the gold and silver spread, where the gold will take a break for a while, and the rest of the metals like the copper and silver should be moving up. And we saw that the copper went up and silver also a bit firmer as well. So all these commodities are available in IG. Do look out for it as well. Now, so that was what we shared on 9th of July. That was just about 3 weeks back. And I mentioned this statement. Yeah, so that was not my original statement, but because of compliance, through IG, I have to change the statement. It says that gold has often viewed as the leader of commodities. When gold prices are elevated, other commodities may also experience upward movements over time. Yeah. So what we have discussed on 9th of July was that we get into some technical, maybe during Q&A, if we can exchange some ideas about certain commodities, we can get into it. We can study into its technical as well. So at a point in time, we discussed about the gold silver spread. Gold may be having a standstill, taking a breather, but if the gold going to take a breather, I believe that the silver is going to continue to climb. And this was captured on the 8th of July. And where was silver? Subsequently, it continued to move in this channel. It went up to a high of close to about 40 US dollars, and today it is at about 38.18. So I suspect that it may continue to range bound in this channel. So once again, as US dollars going to be weaker, and commodities like gold, silver, copper, according to their time and reason, do look out for buying on dips opportunity like silver. Okay, so my plan for buying silver is that accumulate them. Once you have a base, you start to trade on this strategy on buying on low. So maybe during the Q&A, we can discuss about all these trading strategy later. So how about yield? By the way, all this yield, you can view them as a 2 years fixed deposit rate, 5 years fixed deposit rate, or 2 years mortgage rate, 5 years mortgage rate. But what we can see here is that since the 1980s, these are US yields, and also it gives me a very clear indication since when? Since 2022, it have broke above this long-term downtrend line. So technically, it's also speaking to me that all these yields could be moving up. But as we study into all this commodity pricing is really move up, so I think inflation should be on the rise. And I also suspect that all this fixed D mortgage rate will not come down that soon. Yeah. So bonds, if you're in the bonds market, I think my focus is still the same. Since 2022, you have broke this long-term downtrend line. My trading strategy for the US bonds market is always to sell into strength as and when. And for the US stocks, and I think this was the first week of 2025 I make this case study, and I find this few significant trough. I first started with that, and you can try to apply on the other time frame, other market as well, is very useful. And let's look at this monthly chart for NASDAQ. I first started with this few trough. You can find that is beautifully connected. Then after that, I need to do a test on this uptrend line, which I've identified. I place it on the significant top in the year 2000, and that's where dot-com boom was. And I could see that it was very reactive to July last year. So it was December last year. Yeah, July last year, December last year was very reactive. At the point in time, first week of 2025, no knowledge about the Liberation Day tariff that's coming. Then subsequently, because of this inverted hammer, the market came off from here. And although it seems to me that the US market seems that it's going up again, so every meeting I went, whether they're in the financial market or not, they tend to talk about the US market is very resilient. But when I understand or you understand about the context about inflation, then we have to be very careful. It seems to be a high note now, but I still respect my study here on this parallel trend line. And I do expect that in months to come, the US stock market is going to be pretty volatile. Why? Okay, let me just spend some time to talk about this, although not intended, but I felt that is necessary. Now we have to understand that the over this last few years, there's one big move here. We also saw another big move here. Okay, now what is this big move? What triggered this big move? This was 2022, and this was when inflation hit a high of 9%. The market came off. Yeah, before it hit the 9%, the market already came off. Yeah, because of fear of inflation, the threat of inflation. And this was December period that's where the inflation for US CPI start to pick up 3 months consecutively. So the market formed this inverted hammer, and with the Liberation Day tariff, the market are fearful that the inflation may pick up at a point in time. So that was the sentiment. It was also this move from December to April the 9th. This move is also caused by the fear of inflation. Now, I'm just going to point out to you here is that this move and this move is triggered by the fear of rising inflation. Now, so at this juncture, we got to ask ourselves that if the fear of rising inflation still exists, if it still exists, and I think I'm not wrong to make this assessment, though the stock market seems to have above my upper band channel, but I would like to be very cautious about the US stock market. So if you ask me to trade the US on Nasdaq indices or S&P and Dow Jones, I will remain a stand of I do not think I want to take a long-term hold position for too long, but rather I want to be very clear about this. I want to be a little bit more active trading both sides because I'm seeing that the market going to maintain this volatility in months and maybe stretch to years to come, which is good. Yeah. So if you are traders, you should enjoy volatility and you should welcome them. So that's what I'm saying for US stocks and US indices. I will maintain as trade them than to buy and hold for long term. And I do not think that at this point in time it's conducive for me to start accumulating and buy and hold for long term, but rather I'll prefer to trade them. Now let's move on to the most exciting part now, which is called the asset allocation. So this was being shared in 23rd of June, year 2000. So what was this year? This was a year of COVID. Yeah. So I was presented at home, and although I was still at home, um, yeah, but I enjoy this period and to deliver insights at home. So that was that period with IG. And we discussed about the concept about the bullish engulfing body. It's not the classic bullish engulfing body because the classic bullish engulfing body is that the second bar you have to engulf um, the first bar. So the whole concept is that as long as even about to reach is considered, in my opinion and my experience, is that I will consider this as a bullish engulfing body. Why? Because the psychology of it speaks to me. It means that this could be the first month or the Monday or first day, it doesn't matter. The market sell off, but next day or the next month, the market power back up and it closed with a firm closing. It kind of um, win against all the fear. Yeah, so to me, this is a reversal signal. So what we saw in 2020 in June, I start to focus on Asia market because the depth of US is really on the rise. Of course, I still favor US stocks, but I also do not want to miss out on Asia stocks as well, especially after 2022, where we'll get into it later on. So this was a day on a weekly chart TI when the STI was at a rock bottom at 2002. That was some weeks later. And we saw that there's this bullish engulfing body. And subsequently, where are we today? The STI is at 4002. And this was the bullish engulfing body. Okay, so that was what we've shared. And I'm mindful that since about 2020, I start to focus on the other market as well, other than US stock market, yeah, for accumulation. So then in 12th of May 2022 in IG, the topic is about alternative market in a trending interest rate environment. So again, I dwell on the STI, Singapore market. Then I mentioned that if it may be resisted about 3006 along the timeline, but if it close above this 3006, which it break above the long-term resistance, market may start to trend up. So which I think this year we saw that the STI continue to move up to current level at 4002. And I think that the Asia market is going to be the next wave to come. So if you have missed out on Singapore market, wait for a retracement to come. So if there's an accident on the US market in the West, Asia market will suffer a little bit, but to me, that would be an opportunity to buy on dips subsequently. Yeah. So I will place my view on Asia market more than before than in the US market. And then that was the period in May 2022 where that period of time the inflation almost go up to about 9%, and I'm seeing that, and I still advocate that goal. And that was the point in time in 2022 was at 1,887. And I discussed about this strategy that I'm using, that every cycle there are four stages: decline, range or income, value, and growth. So at the point in time, our discussion was that I think the goal is still uh, at the beginning of growth. There's more upside. So that's what we discussed. And of course, today goal is at 3,003. It went up to half 3,005 because of inflation that I'm seeing there. It's not exactly over, although the CPI from 9% have come down to about 2.7, but gold still maintain at high. And what does it speak to you when gold is at high? It also means that investors are still seeing that inflation is not over at all. And then we have on 29 May 2024, it was with IG, and I archive all these because what we discuss from time to time, I did a lot of homework for myself and I present to IG. I hope that their audience, their guests, also benefit as well. So starting from 2022, I started to take notice of the Hong Kong market, especially those China stocks, the tech stock listed in Hong Kong market. So that was last year in the NTUC conference hall, and the topic is positioning for what's next. And then I start to look at the bellwether of the China Hong Kong stocks, and I identified Xiaomi. Yeah, so we again saw that there was a period of range. Remember, each cycle there's four stages: decline, range, value, and I suspect that the growth may have just come because at a point in time, I understood that Xiaomi has get into from handphone business, household item, electronics to EV. At a point in time, I also study about the Apple trying to get into the EV market, but in the end, they give up the idea. But Xiaomi persisted. So at a point in time, I kind of like the idea, and but just based purely on the structure itself, because earlier I mentioned that some analysis that I like to use is called quantamental analysis. Quantamental analysis, it means that we combine technical and fundamental, and I'm seeing something there. And I still remember the NTUC conference after the webinar. There's a very concerning um, guest. They come and point to me that he saw some YouTube video that Xiaomi car exploded. Asked me to be very careful to invest in Xiaomi, but he's out of concern. But I think I saw those videos as well, but I didn't go and verify. Is it authentic or not? So, but I focus on structure. I focus on the ratio, the data, and I bought it anyway. Yeah, so the growth for Xiaomi today is we saw the structure from the income to value and the growth, and today is at 54.70. So I'm not getting in anymore. The ratio is a bit high, but I'm still holding that, and I intend to hold for a little bit longer term for Xiaomi. But I would have to say that these are the bellwether for China, Hong Kong stocks, but there are a lot of other stocks that is of a very similar nature that still today is around the value or at the beginning of growth stage for those China listed Hong Kong shares, which I still look out for it from time to time. So maybe during the Q&A, if you have any particular counter that you are interested to look at based on this behavior, we can explore together. Yeah, that we can look at the numbers, look at the business, what they're doing. Is there potential that they may get into the growth stage? Because as investor or traders, this is something that I always look out for to get into the market, especially to recognize the value stage and at the beginning of a growth stage. So I don't have to wait for too long. So I just share with you is whether is it a parallel line or these cycle. It can apply to most of the market and different time frame. So for those short-term traders, you try to apply this on the 15 minutes charts. It should work as well. Okay. Yeah. So I think the last slide that I'm get into before we get into the Q&A, I just want to do a very quite a bit that we share, but I just presented very quickly to you. There's about total 60 slides that I've prepared, but I want to spend more time on Q&A because on the 9th of July, uh, my experience that there was a lot of question that we did reply all of them. So I felt that it's a little bit um, wasted. Yeah. So today I just want to spend more time with Q&A. But if you look at the bigger benchmark here for the Shanghai Composite Index or the China A50 stocks or index, we're able to see a very similar behavior. And what I'm seeing here is that there's this asset rotation play where if US is getting a bit unsure because of the debt and depreciation of US dollars causing inflation, when inflation rise, interest rate will maintain or go higher, and that's no good for stock market. And I see a lot of value in the Asia stock market. So as I look at the benchmark in Shanghai Composite Index, I'm seeing over the last few decades, there's this strong consolidation. And by the way, after consolidation is always either move up or come down. And look at the fundamental development. I think the chances of breaking this high and moving up is much higher. So this was captured about 2 weeks ago as I have to send to IG compliance clearance. Then was at 3534, but as of today, it went up to 3598. So has it broke above? Not exactly because we're looking at the 3-month chart. Yeah, so 3-month chart, it means that it has to broke above by end of September. If it can give me about 3,750, it close above here. To me, based on this 3-month chart, it gives me a very clear signal that at the end of September, if it can close around here, I would be definitely keen to get into the different indices of China related listed in Hong Kong and also the individual counters as well. So I think we still have a lot of lead time, but that's what I'm seeing here. And I'm going to open up this time for Q&A. But before that, and Ben is going to help me to facilitate all the questions, and we're going to get into a discussion here together. So what you can do is that how to get connected. I have this YouTube channel. Every week I will share some market insights. So you have not subscribed to my YouTube channel, you can look for my name, Kon Hao. You're able to um, view my insights that I'm going to launch it every Sunday at 10 a.m. And for this week, my idea is what I just shared with you about NASDAQ. I think the topic I'm sharing this Sunday will be why is the market at the high despite tariff? I explained there's two key reasons why the market is still moving up despite tariff. And then how to get connected, you can visit my website. There's more learning resources. Go and find out about them, how to understand more about the cycle of decline, income, value, and growth. I think you will like it. And last of all, if you find that what I share is interesting, want to spark some ideas, some strategy, I welcome that you can email to me at conhao@weipedia.com. So I'm going to forward this time back to Benny, and if there's any Q&A out there.
Hi, Gunhao. Back.
Yeah.
Okay, thank you so much for the sharing. So we're gonna start off with our Q&A now. So for everyone who are still tuning in to the webinar, so please once again please feel free to drop in any questions about today's topic, or if there's any maybe form of a specific market or product which you would like to dive into and we can explore together, then now will be a good time to drop them in the questions box. So without further ado, I'm gonna start off with the first question. So this was from Johnza N. Will silver rise with gold?
Um. Okay. Good question. I hope that you can see my uh trading view chart right now. Let me just try to get um silver and gold and platinum. Yeah. So your question is that will silver rise with gold? And this is some study that I did some time ago. So Benny, I'm not too sure if you can see my trading view chart.
Yep,
Gold,
all good.
okay, yeah. So you can see here is that, but let's don't look at the now, look at the past, right? Since the 90s to the millennium to current, yeah. So this is very very useful chart where I always do grouping precious metal, who are they, including copper as well, which did not include here. That when we look at the past behavior, in fact, we have to recognize that gold, silver, platinum move in tandem together. Um, and gold always move first. Why? Because gold and silver, gold is gold is like durian, right? In Asia term, gold is durian, mangosteen is the queen. So gold used to be, even today, yeah, gold, where we discussed on the 9th of July that if you get 1 ounce of gold or 1 ounce of silver, you go to our local bank who have bullion department, you literally can exchange Sing dollar back. So gold and silver is still a currency, is money. But copper, you can't do that in bank, but it's precious. Now, what happened here is that when fear of inflation or outlook for inflation, that where I start to spoke about gold a lot in 2016. Yeah. So, but inflation have not arisen, but I'm seeing that inflation should come. And especially during the year of COVID at home, I've been speaking a lot about inflation may come, but it only came in 2022. But what I saw that gold is start to move up, and because investor also also we saw the same thing that inflation may be coming, but we just don't know when. So when gold move up, gold is always the front runner. You always start to move up ahead of inflation. But it comes to a point where gold is so expensive. And in a study that I made, is always gold became so pricey, then investor will also look out for alternative inflation hedge. So they'll always go back to silver. So my study over the last few years is that gold usually will move up first and followed by silver. And that's a very interesting phenomena that I see. I'm not saying that it may happen this time round, but in the past few times is that gold always move first, but it became so pricey. Investors still believe that inflation will be there, so they'll always look for alternative assets. Then you'll go and buy silver. But when that happened, the silver magnitude of from the trough to the high, and my observation I make is the yield or percentage gain is much more than gold. So this time around, if you ask me, silver really start to move since about 27 $30 about the last 2 years, and today is about 35 30 no, today is about 38. So really start moving. If you ask me about silver will catch up, my answer is yes, based on this relationship. Yeah, so I hope that I answer your question.
Thank you so much, Konhao. And maybe if I can just add on to the question, based on what another question has just come in. So this is from KF Low. Under the commodity spectrum and the topic that we are in now, just wanted to check, like, then why would copper not be in this picture, like, with this chart in TradingView?
Yeah, no, definitely. I'm saying copper is part of the. Copper is not precious metal. But copper is a metal. It just happened that I have this chart. I can include copper if you want to. You're able to see a similar behavior. No, copper is as good, but we have to recognize that copper is in the definition. Copper is not precious matter. Precious matter is being qualified is because they're so precious. The ore means that every, say, a cubic um, earth that you mine, you can only find a very small fraction of gold from every cubic meter. Yeah. So copper you can find relatively large in terms of the ore value. Just put in perspective here is that what is precious metal is that in historical from the beginning of time until today, the gold being mined is in total in kind of Olympic size swimming pool. From the past to now, okay, being mined is about 4.5 times of Olympic size swimming pool. You can fill in all this gold bullion. That's quite surprising, isn't it? Yeah. So I mean that's all. 4.5 times swimming pool. Yeah, that's all the gold ever have mined up to the current day. But silver is about 66 Olympic size swimming pool. And how about copper? Copper is about 160,000 swimming pool. I cannot be exact on the numbers, but it's around there, about few 100,000. Yeah, if I can remember, it's about 160,000 swimming pool or, that you can fill in copper. So it cannot be qualified as a precious metal because it's not. But yet the pricing, if you're gonna overlay the copper with all these, you're able to see a similar behavior. It's just that happened. I pull out this chart. I did not include the copper, but copper earlier I did mention that I also taking a very close look at copper as well. Yeah. Thank you.
Wow, thank you so much for the insight. I think it really does bring into a dilemma like, whether do we really classify copper as like a precious metal? But I do think like, the way which you try to illustrate it and for us to picture it in terms of like the Olympic swimming pool,
Yeah.
maybe it is a question mark on whether copper might be a precious metal. But I think that is something that maybe we can always continue to look into. Yep. Okay, so now I'm gonna move a bit away from the commodities side of spectrum. So this question, the next one will come from Raja KD. So couple of questions coming in with regards to the USD. So his question is that given that the US stocks could be overbought and the USD itself may come down. So what does this all mean for global markets? So adding on, some of the questions that come under this topic would also be, for example, would this changes also suggest that it will be rather long-term trend for USD to go down. And then, yeah, so is there any possibility of the dollar for weakening even further?
Yeah, I think it's a very good question because this question kind of helped me to sum it up what we have discussed here tonight. Let me just show you this slides here. So you're asking whether the US dollars will continue to come down. I think the consensus, I think if you join us later, right, at about the 10 minutes of this run, what we did was about 70 participants. I asked them what's your view for the dollar trend in the next 5 to 10 years. About more than 90% of you say that the dollar trend is should be coming off. And of course, during the presentation, I present to you why the US dollars is likely to trend down for the next 5 to 10 years or even more. But of course, as it come down, where are the opportunities? So I think this question, it kind of sum up the whole presentation here this evening. Now, so your first question is that is US dollars going to continue to come down? The answer is likely a yes, based on what we've studied, because the debt seems to be continuously moving up. So earlier also discussed about, in fact, this debt and QE, it caused an inflation climate. It's not a weather, right? So weather is short term, like for example, war, COVID, even tariffs. These are weather. It come and it may go. Yeah. So it caused price to spike. That's why we saw that in April the 2nd to April the 9th, because of tariffs, the price spiked in the Nasdaq, but now it's moving up again. But there's this underlying issue that we have to agree on, is that inflation is very uncertain. Yeah. So as the debt continue, the QE may deploy in the next crisis that will cause inflation to stay. When inflation stay, interest rate will maintain at this point in time. So I felt that Jerome Powell did not bow down to pressure because he understood what we have discussed tonight. Yeah. So he didn't bow down to pressure, and interest rate remains staying higher. So when interest rates stay high for too long, it's no good for the stock market. Why? Because most of the stock companies, if you look at the Magnificent Seven, these are good companies where they have a lot of cash reserve. Yeah, but we have to look at the totality of the NYSE is made up of a lot of other smaller mid-sized company from Russell 2000. They are not so fortunate as the Magnificent Seven, so they don't have a lot of cash reserve. Now, as the inflation continue to rise or stay at this rate, it's very difficult for them to expand the business, because most of the business is that they also need to borrow money for expansion. So if you ask me, based on what we discussed tonight, I think based on consensus, most of us agree that US dollars will continue to move down, and that will trigger more inflation. That's what we study, right? When if interest rates stay, inflation start to pick up, interest rate may even go higher. And then what will happen to the stock market? The market will, although now it's at a high, but I think the market will be, if you're a trader, I think you should welcome it, because I think the US market will be pretty volatile to come, although it's at a high right now. But are very cautiously bullish about the US market. I cannot go against it because now it's at a high. I have to recognize that it's on the trend. But in the same time, for US market, because of this relationship, high inflation lead to interest rate to maintain, and I suspect that the US market will get into a very volatile period. So personally, I would prefer to trade the US market getting in and out. But in the same time, a little bit more on the long-term hold, I would favor other assets like the commodities where we discuss gold and silver. That was what we discussed on 9th July. It really started to move up. So is copper, and not forgetting the other commodities as well, like the soybean oil that I saw that is moving up again. And just to sidetrack a little bit, you want to know why soybean oil has been moving up? Because the agency has include, diesel is a very big thing in US because their machineries, their truck, they use diesel. But there's this regulation being pushed down that they want their refiner to include more biodiesel friendly. That means to include soybean oil into their diesel production as a clean energy. It also helps to, because soybean production or export is a big thing in US, is China is buying less of it. It means that they also have to stimulate local consumption. So they're going to use more of soybean oil into their diesel, produce a biodiesel for their uh, truck and engine to run, and therefore the soybean oil has been moving up. So again, I'm going to say this here is that gold is the leader of commodities, and the rest of commodity will according to their timing and reasons. So for soybean oil, this is the reason that is moving up right now. But I think the underlying thing is the inflation climate. Yeah, because of the weaker US dollars over time, every commodity especially will become more and more expensive. So to me is a lot of opportunity out there. You just have to understand the mechanics of it and look at the market behavior, when it's going to move. And what we're going to do here is to, what we discuss here tonight is that try to be so focused to look out for which one is the next upcoming trend. Yeah. So then we also discuss about other than US. In fact, we're in a good position in Singapore, very close to China and Hong Kong. We can do a lot of assets rotation as well. Yeah. So thank you for the question. I think it kind of helped us to sum it up what we have discussed tonight.
Thank you so much. I think that really hopefully answers out everything. Maybe let's try to do a couple of, or maybe I'll do two more questions. I am looking to sum up one on technical, which we maybe I will see to save it for the last. But some of the questions that I've noticed so far is quite interesting. So maybe if I may, this is combining with questions from Min Q and from Val Neo. So the questions are covering more about queries regarding Singapore. So maybe starting off with Val Neo first. She has asked, how does a weaker US dollar affect Hong Kong and Singapore stocks? And maybe if we may add on is from Min Q, what do you think of Singapore rates? Would you say that they are investable now?
Okay, I think US REITs is always investable. It's just that the decision that you have, the plan, or rather as an investor, what kind of investor are you? Because you have to understand that REITs is not a stock. Yeah, so REITs is for dividend play. So you got to be very clear about this. Yeah, sometimes you buy REITs, the market may go up, and that's, to me, you're fortunate because you riding on the dividend play, but it also provide you the capital gain, that you receive some capital gain. But let's be very clean about this, is that REITs are, the purpose of REITs is for you to receive dividend. Yeah, but fortunately or unfortunately, this particular assets, the price will fluctuate. Yeah. So the one way to, maybe I just sidetrack here, the investment strategy for REITs is this. So try to have a REITs where they have longer term history, but you have to understand that the REITs focus is for dividend play. It means that you are not exactly into capital gain, but if it come, good for you. Dividend play means that you are generally not a very risk taker as an investor. Yeah, because when we get into uh, common stocks where they pay dividends, I hope, and you also look for potentially capital gain as well. Just like the Xiaomi I mentioned about, it pay dividends, and there's also opportunity for capital gain if their EV are successful. So that was in 2024, but it proven to be successful. So that's good. But for REITs is you're getting an income. And why I say that you need to study the longer term history of a particular REITs is because you will notice that the rates do not go up a lot over the history. Usually is in a history their cycle, let's say 10 years history for this REITs, but trying to understand where is the range. Now for REITs, usually there's this range, upper band and lower band. When market is not so good, the REITs will come down to its lower band. And that around the lower band is the best time to invest in REITs because in terms of the baseline price for the REITs, is around the low. The business is still as usual, and hopefully they'll still pay you the average dividend. So you try to get hold of the lower band of the REITs instead of sucking into the hype of the upper band of the REITs. Yeah. So you try to understand that. So buy around the lower band of the REITs, and that's the REITs play. So if you ask me, REITs, is it good for this time? It's it's classic, it's always good. It's just that what is your motivation as an investor? Maybe I will suggest that you should have maybe 10 or 20% of your portfolio in REITs. If you're a bit more savvy like myself, but you want some comfort that pay good dividends about 5% or more, but recognizing that REITs, the whole objective is not for capital gain. So you have to understand that. So therefore, only park about 10 or 20% in REITs if you want to. Then the rest, based on my age and my profile, I would like to take a little bit more risk, maybe about another 50% on the common stocks. Yeah. So that's my plan for REITs. Then the combined question that you have, Benny, is that how will weaker US dollars affect the Singapore market, right? And I would say that a weaker US dollars will cause the Sing dollar to be strengthened, that we can see over time, right? So it's even better that with a weaker US dollars, but I hope that it's weaker in a sense where it was good. You see that the dollar Sing actually weakened over time. You don't see a lot of spikes. So I don't like to see spikes because spikes, it means that the market liquidity is not there. But it's weakened over time. It also speaks to me that Sing dollar is strengthened over time. About maybe 10, 15 years ago, different investor will ask me about should they buy Australia property, all this and that. Uh, I know whatever I say, they will still buy anyway. So but my whole idea back then, even $15, 15 years ago, is that I think Sing dollar is going to be strong. So if you're going to buy Australia property, maybe good, but you may lose out on the currency depreciation on Aussie dollar, which over the last 15 years, you saw that the Aussie dollar has depreciated. So on a weaker US dollars note, I would say that Sing dollars will be strengthened. And in fact, that's even better for the Singapore market, not just as a Singaporean or if you're a permanent resident earning the Sing dollar. I will continue to advocate that there's a proposition for Singapore stock market. There's a lot of value, and the foreign investors are seeing that as well. That's why I could see that the um, over the past few years, there's an increase in the fund flows from foreign investor to Singapore local stock market. That's what I'm seeing here. So in a weaker dollar context, it actually helps Singapore dollars or Singapore stock market. That is what I'm seeing.
Okay, thank you so much. So maybe let's dive into maybe something. Let's have one more question. But I'm thinking in this question we could have something more of a hands-on and technical kind of demonstration if it's possible.
Sure.
So yep. So that question will come from Ethan, which he has asked like, can you give us an example of how you would possibly take an entry, and what setup or specific triggers would you tend to wait for? And maybe in addition to that, I think there was another question which I may check that it might be also something related to being technical with the question like Are there any like is there a duration for there are four phases, for example, decline, income, value, and growth? Like how are they determined? So will we be able to get a hands on today to see how this technical
Definitely,
side of
yeah,
things work?
yeah,
Awesome.
yeah, definitely. So I think if you can see my trading view chart, I think that'd be great because I've included copper inside. Uh, can you see that the purple line is copper? And I want to appreciate this all these metals that is moving in line over the decades. Yeah, so copper is not forgotten. Definitely, yeah, I like copper as well. Okay, so now going back to your question about how to apply what I've just demonstrated is that maybe I need an assets instrument. Maybe the assets instrument can come from Danny or any participants. Then I can show you what how to apply. Maybe what I said suggest that how about we get into a particular counter, particular stocks. I do not know. So Benny, what stocks or the participants or our guests would like to see? Yeah.
Mm, well, there is one. This is just a quick shout out to Win. So I think he mentioned a couple of markets or products that we can look at. They are mainly focused on the uh, China markets or so. Maybe if I can check, will we be able
Yeah.
to do hands-on with, let's say, JD or BYD? Like either one
JD.
of them? Yes.
Okay, I think JD. Yeah.
Okay.
Uh, JD Nasdaq.
I think that's fine. We can explore with the Nasdaq.
Okay. Okay, let's look at the JD. So what we could see that the JD here is that we can see in the context of the cycle. Let's look at the last cycle that we have. That was in 2014. I was listed in Nasdaq in 2014, right? So you can see a period of consolidation. Then you can see a period of spike. So basically, the whole idea about how I recognize all these is that when the price spike, you have to understand that the price always spike with a reason, because it requires a lot of finances to cause the price to spike, right? So when it spike, you also have to understand the fundamental at the point in time, what is JD doing? Yeah. So after spike, if it's continuous, it should enter into a growth. Yeah. Yeah, but if the growth are not being managed well, or it could be a macro reason that was during COVID, and also the Chinese government come in to do the cleanup, which I welcome the Chinese government do the cleanup because I think they clean up in many sectors, in property, in tuition, education, in the IT sector, microfinancing, which is good because my view back then was that anyway, there's a lockdown. Um, it seems like so far away, right? But that was just about a few years back. To me, I try to understand what the Chinese government trying to do is that since there's lockdown, the market is a lockdown, so we must well use this time to clean up the whole economy. The things that is not properly uh, structured, we structure it now. When the time is right. Now, as an investor, I look at it now. The whole ecosystem about investment in China is much better than in the past. Yeah. So and we can see that, of course, how JD had declined. You can see literally there's one whole cycle here, income value, growth, and decline. One whole cycle. But now the question is that is it going to move into another income value growth and decline? And structurally, what I could see here is that there's a period of stagnation here. There's a period of growth here, value here. Now the question is that, and I have to pass you this patent to do your job here, is that potential that again the price spike for a reason? Then you gotta understand about JD.com. What is the proposition? Are they renewing a new strategy of this new environment, new China, where China is going to take on the world right now? And so what's the proposition that if you believe that you're going to enter in growth, so you got to understand the fundamental. So I can't tell the fundamental because that's not my study. So your question is that how to apply what I've just shared to the market. So I just ask you to randomly give me a market. So we just see it very clearly. So the fundamental, you got to look at it, study into it. What's the fundamental? What's the development? What's the whole environment? Does the JD strategy, investment strategy, fit into the whole global demand? Are they fast enough? Are they advanced enough? If they are, then that's good for them. Then there's a proposition that it may enter in a growth stage. So then I hope that therefore I give you my email. If you can, just share with me what's your thoughts if you find that JD is going to enter into a growth stage in time to come. I would like to hear your view so we can exchange some ideas. Yeah. But if you want to learn more about these four stages, you can visit my website. The resources are all there. Okay, I think you want to have one more example,
Mm,
and I hope that I
okay,
demonstrate clearly to you how to apply this four stages in every cycle. Yeah.
I see. Thank you so much, Conhao. I think that was really one good hands-on that we can run to. I think moving forward, maybe if there are any other products, I think there's quite a bit of questions that are ranging from multiple asset classes. We have a couple of questions coming in regarding the cryptocurrencies, and then we are jumping back to forex like USD JPY. Fret not, and I would encourage everyone else, for those attendees who have stayed all the way so far, thank you so much. Please do stay tuned, because currently, maybe if I may, just take a few minutes of our time to run through a couple of things, and then we will need to end off with a feedback form. And during that feedback form session, we can still have a bit of time. Then let's see if we can run through maybe one or two more examples or maybe questions from the Q&A.
Sure.
All right. Okay. Without further ado, I shall quickly share my screen. Then we'll just run through this. Okay. Now, just a quick one. So once again, for those who have stayed all the way for the webinar, I would like to sincerely thank everyone for staying all the way. And I think today, while we previously in the 9th July, we really covered a lot more on the commodity side of things. We really started to go in depth more into like on the US dollar. And then with the Q&A, Konhao has also shared a couple of his advices on technical. And I think that is something that is really appreciated. And I think there are many things that we can all take back home today. So without further ado, like what we will be sharing is that we have an exclusive promotion just for attendees today. So it's some for those of you who have previously joined in the 9th July webinar session. This promotion will not be something too foreign to you all. So basically, it's also really simple. So at the end of the webinar session, we will be tracking the attendance, and then we will be sending over an upcoming email which you will need to register your interest. Following by that, you will also need to place at least Singapore dollars of $1,000 from today's date onwards. And lastly, you just need to trade a notional value of US dollars $500,000 or more. Okay, so just a couple of things to cover off in terms of the terms and conditions. So do note that in your trading of notional value, a qualifying trade will refer to a CFD transaction with a minimum size of one mini contract or equivalent on which you have paid commission. And also do note that the notional value for each qualifying trade will then be calculated based on the notional value of the open transaction and not the notional value of the closing transaction. So just also note that the Singapore $250 worth of Takashimaya vouchers are only applicable to users residing in Singapore, because if you so deem to be qualified after fulfilling the criteria, then we will be posting it over to a Singapore address. And also just a quick heads up also is that in the event that, because if you have previously participated in the previous promotion during the 9th July session, and then in our tracking that we have noted that you have received you have previously qualified for the previous promotion, then unfortunately you may not be eligible for this current promotion. But please do not fret not, because as always, this is never the last session for our IG webinar sessions. We will definitely be having more sessions with Konhao, and also even more guest speakers. So do stay tuned to all of our webinar sessions, and then are always definitely looking forward to coming up with better rewards. Okay, so lastly, also do note that if there's any information, do feel free to reach out to marketing.sg@ig.com, and the deadline of promotion would be on the 13th of August, 23:59 p.m. Okay, so once again, just a quick note. Um, Stand by. Let me just check the slides. Okay, so just putting up the slide again for our new users. So once again, like if let's say you are interested to start your trading journey with IG, the QR code is back again. So I'm just gonna quickly reiterate for new users. It's really simple. All you just need to is create a new account with IG. Once again, also fund $1,000 into your account and then start trading. And then as you can see on the right side of the table, by making your first trades and by accumulating even more notional value, you can also be entitled to our welcome bonus. Okay, so lastly, we will always like to hear your feedback, and this is always the most crucial one of the crucial part for our webinar sessions. So, if we may, for our tuning attendees, it will really appreciate for most of us to take a moment of your time to just scan the QR code. Uh, Basically, this feedback form will really cover on how is the performance of the guest speaker, or even on IG side, or what are some of the topics that you would like to see on the back end side of things also for in the future. Let's say if you want to have what are some of the rewards that would come into your mind, or if there is any specific type of topic which you would like Conhao or even for IG to curate in the future. So this now is the time for you to take a moment just to scan the QR code and fill in this response form. Okay, so I'm probably just going to leave this slide for a couple of minutes, and maybe while we are in this slide, maybe Konhao, maybe thinking we could maybe cover one or two questions again.
Sure. Yeah.
All right. So okay, so I will just touch on one of the latest question for now. This is from Melissa. So I think please correct me if I'm wrong. Yeah. So we understand that tariff can help US to have substantial money, but isn't that can help reduce US debt? Hmm. Will we be able to interpret this?
Yeah, so definitely, I think the tariffs will bring some income for US, but I think the flip side of tariffs is that it's going to cause inflation because uh, as an investor, we have to understand that if you ask me to look at, there's so many indicators, so many elements to take on to study them. Which one is the most important? Can I say that the most important is inflation? Yeah, so now go back to tariffs. Yeah, it may bring income. What's the flip side of tariffs is that it will also cause inflation. So inflation and interest rate is the, to me, in my opinion, in my experience, is the number one indicator to look at in financial market. And if you're new to investing, I would recommend that study and understand inflation and interest rate and how interest rate is going to affect our day-to-day living and for business operation. Um, so now you have to understand for tariffs, it will bring in income for US. Yes, it's true, but when they increase 10% of tariffs, what does it mean? It means that the importer of US have to pay 10% more on, say, we export Singapore product to US. Importer of US to pay 10% more, and ultimately importer in US to pay 10% more. It also means what? They have to price up to the end consumer of the US consumer. So what does it mean after that? It also means that the US consumer have to pay more for whatever product they are buying. So this will lead to what? Inflation. Yeah, so all these taxes, the 10% more, who is collecting? Yeah, of course, the US government. From who? From US importer. Yeah, it's not the exporter, it's the US importer. So don't get it wrong. It's from US importer. So ultimately, yes, they may get more income, but the flip side of it is more inflation, which is, I think, is harmful over the long term. Yeah, so this is what I have to say. So, but as a trader, as an investor, I think looking beyond is that we have to understand that with all these turbulence, actually, to me, turbulence is good because when market is uncertain, it means that there's also certainty in other markets, like what we've discussed tonight. The bonds is maybe likely to continue to go down. The commodities will take turns to move up. Interest rate likely to move up. It seems that there's some rotation play to the Asian market. Likely now is that maybe at the beginning of growth, maybe. So there's a lot of opportunity. So I would say this that personally I like uncertainty because the more uncertain the market is, the more opportunity there is in the market. Yeah.
Thank you so much. I think that really helped to cover a lot also. And hopefully, Melissa, we were able to address the question. So we have started to see a couple of entries responses coming in. So I believe we can possibly close off the session now. And for those of you who have also came up with a lot of questions, thank you so much for your active participation. It really means a lot. And I think like although we didn't manage to really go in depth yet about maybe on cryptocurrencies, maybe on forex, but I do believe like these are some of the topics that uh you know we can definitely have something to discuss with Konhao, and we'll see like really soon what are some of the topics that we can look forward to for IG webinars with Konhao. What do you think? Crypto or forex? It's a question mark, but don't worry, we will figure it out. And then, yeah, we'll definitely be looking forward to come up with even more topics on the macro side of things. Okay, so probably right now I'll close off the session in a bit. So once again, I would like to thank every one of our attendees for taking part in this session, and also sincerely I would like to thank Konhao for always being one of the closest partner with IG. I think we have really gone through a lot of experience. Do stay tuned. Like previously, we've had the we've had the seminar sessions, and then we've also had the uh, webinar sessions. So without, I think most of them we've really covered a lot of engagement, and you know, in terms of the macro, there is never a doubt that the forecasting would ever go wrong. So do stay tuned for subsequent trading seminars and webinars. And thank you so much. So with that, I'll probably close off the session and wishing everybody a good night. Thank you so much, Konhao. Thank you so much, everyone. Thank you.